Thank you for accepting our invitation. Today, the Central Bank Board decided to reduce by a quarter percentage points the refinancing rate, setting it at 6.5%. We'll ask Mr. Galstyan to present the communique, and then will be a Q&A. Good afternoon. As Haik mentioned, the board decided to reduce the refinancing rate on the session of December 16. The board of the central bank reduced by 0.25. In November, it was 3.1%, the inflation. Core inflation edged up, standing on 3.8%. In Q4 24, risks of a further slowdown in demand conditions globally in Armenia's key partner economies persist, while inflationary pressures in the US have intensified. Consumption in the US continues to drive relatively high economic growth and an elevated inflationary environment. However, risks of correction in assets prices and labor market weakening could negatively impact the medium-term growth outlook. Uncertainty regarding the medium-term implications of US fiscal policy, including the impact of rising public debt on long-term interest rates, persists. At the same time, in Armenia's other trading partner countries, risks of weakening growth and demand conditions persist, even as some uptick has been observed in recent months. Oil prices and in recent months food prices as well have gradually declined. However, geopolitical uncertainty and tensions in international trade relations remain a key source of global inflation volatility. In this context, considering weakening demand on the one hand and persistent inflationary risks on the other, central banks in major economies would be expected to either maintain or gradually ease their tight monetary stance. In Q4 of 25, economic activity in Armenia continued to remain high. Growth continues to be driven by the construction and services sectors, as well as the impacts of certain short-term non-structural growth drivers. External demand for domestic goods and services has remained high in Q3 and Q4. At the same time, uncertainty remains elevated regarding the future outlook of domestic demand. In this context, demand continues to have a neutral impact on inflation, while recent increases in headline and core inflation have been driven by supply-side factors. Wage growth, non-traded sticky prices, inflation, and inflation expectations continue to stabilize. At the same time, risks for short and medium-term demand pressures from fiscal policy have weakened. In the context of current macroeconomic developments, financial markets in Armenia generally expect the Central Bank of Armenia to gradually lower the refinancing rate over the next 12 months to approximately 6.25%. Amid high uncertainty, the board discussed on the one hand Case A-type scenarios, where possible underlying developments would require a higher path for the policy rate relative to current market expectations. This includes scenarios on the other hand, the board also discussed Case B-type scenarios where potential economic developments imply a more rapid and aggressive downward path for the policy rate than what is currently priced in markets. These scenarios include concerns regarding overall concerns about a weakening growth outlook in key trading partner countries. Balancing the aforementioned risks in both directions, the board finds it appropriate to decrease the policy rate in line with market expectations. The board resolutely affirms its commitment to adopting the appropriate policy actions and strategy to ensure the price stability objective of 3% inflation in the medium term. Questions are welcome. Arka, please. Thank you, Mr. Galstyan. What are the positive trends in the capital market development in Armenia observed in 25, and what would be the trends in 26? With your permission, a follow-up question. What stage is the secondary legislation development pertaining to crypto assets law? Could we expect that in 2026 we will have licensed entities out there? And in general, what's the vision of the central bank about innovation and extracting an equilibrium between innovation and financial stability? Thank you for the questions. Let's start with the capital market. Had this question been asked 5 years ago, I would say that we expect the market will undergo certain developments, especially in terms of bonds. The expectation were that our policy and efforts, the creation of infrastructure, exchange and off-exchange, would contribute to a certain shift in the capital market. Not only issuing bonds by financial organizations, but the real sector companies would also try to attract funds through issuing bonds. At this point in time, we have a situation where the government partners have developed a project, special support program, as a result of which we have great issues, not only by financial institutions, but also non-financial institutions. That's what we planned. I may say we even exceeded those expectations. We have a certain volume of issues. In comparative terms, if I recall it correctly, 700 billion in excess of bonds were issued in the Republic of Armenia. And if I'm not mistaken, our T-bills in drams, 2.0 trillion, about 25% of the total. We have non-governmental bonds out there. This is satisfactory. We think it's just the beginning. There are two issues that I would like us to focus our future plan of action is developing the shares, not only debt instruments, but also share instruments, which will allow to attract new types of investors. The infrastructure essentially is out there. If we go to development of share papers, I think that would be beneficial both for businesses and investors. Another issue I would like to focus our attention, and I believe we need to be alert here. When we were registering the prospectuses for the recent issues, you know that the prospectuses apply to bonds as well. I noticed, and the partners discussed as well, that the leverage ratio of the bonds issued by real sector is quite high. That is, financial organizations normative framework, we leave them to have adequate capital adequacy norm 12, which assumes leverage 8 or 9, give or take, around that number. Whereas we recently saw that there are partners in the real sector whose leverage is 10, 17, 18, 19 in this bracket. I think both the real sector partners have to do there. They need to increase capital to be able to increase the debt. It must be commensurate. And the investors have to watch out. They should pay more attention to those financial the indicators. Leverage assumes certain risk. As for cryptos, today, if I'm not mistaken, the National Assembly in the first reading will deliberate on this transition regulation. There's a legislative package. As of January 1, 27, cash transactions in crypto will be prohibited. So in this transition period, since January 26 to January 27, we allow crypto assets to be bought up to 300,000 drams of cash, a compromise interim solution, but with identification. They prompted me, it's important. the buyers have to be or sellers have to be identified. About crypto, in response to your second question, it leaves food for thought whether we strike the balance between innovation and financial stability. If you define what innovation means, I believe you will see that we stand by innovation. Innovation is not buying and selling crypto assets. Innovation is the technologies that back it and solutions that are behind it. And I assure you, in this respect, the central bank, as always, is standing by innovation. If we're talking exclusively about buying and selling for cash or non-cash crypto assets, I see you would agree there is no innovation here. Thank you. Mr. Galstyan, I would like to reflect on the interest of mortgage loans that are increasing within the recent months, notwithstanding the incomes of the population remaining stable. You also reflected, I remember, about speculative increase in mortgage increases about 25%. I would like to mention whether this growth trend remains in place, and if it's speculative, then what steps are being taken by the central bank to prevent or neutralize that speculation. I believe that we need to carefully select the terms and be precise. In its financial stability report, the central bank several times within the recent reports mentioned the risks that exist there is overheating in the real estate market. When we looked at it at various models, we saw that implementing various projects, including the return of withholding tax, which was historically there, we had a certain increase of prices in the real estate market. Our concern was that the immediate slumping of or rapid slumping of those prices may result in unwanted developments in the economy. Thankfully, we observed that those risks are being neutralized, like I mentioned in the press release. The adjustment of prices takes place gradually, which is the most desirable scenario for us, essentially. So, in our next financial stability session, to take place shortly, we'll observe more in depth the possible developments. This session was on monetary. We didn't look at financial stability toolkit at greater length or more depth at this session meeting, and by next meeting we will reflect at greater detail. As for our assessment whether it's speculative or not, we don't use this term. It's not doesn't belong in our vocabulary. We try to refrain from such modifiers, windfall or speculative. These are words you cannot back with theoretical backing. We want to be in our speeches as precise as possible. Please use the mic. You mentioned you cannot find theoretical backing. What about practical backing? Do you see speculation? In other words, I do not see speculation there. I see opportunities for natural persons, which the natural persons have taken advantage of. A person who had 1 or 2 apartments, he saw that there is an opportunity to have a third one through this project of withholding tax return. There is no speculation there. Let me finish. We're talking about this person not doing this for speculation. Speculation is when you take something expecting the price will increase to be able to sell for more. I apologize about banks financing. Conventionally speaking, although it's not that price, if it's $750 per square meter in the primary market mortgage, the sale price. But the banks are financing up to 1,000 drams, 25% more. Don't you see speculative risks here or not? Or do you observe that trend among banks? Frankly speaking, we have norms that pertains to collateral and loan ratio, and they are quite rigid. It would be hard to say about perceptions existing about banks doing that which they shouldn't. We will dwell on that greater length during financial stability meeting. Mr. Galstyan, the increase of volumes of bonds market, concurrently to that, do you see changes in the volumes of invested deposits in the banks? Thank you for the question. I will quote the growth numbers. I'm interested whether those amounts are moving to the bonds market. The banks only partially acquire those bonds. Loan to collateral ratio at this point in time is 115%, which assumes that the deposits are growing progressively. The loans are increasing progressively, but the deposits are also increasing. Deposits in the GDP is 57.3%. Not to talk in absolute numbers, we have also increase in deposits. Not only investment in bonds, but the population is increasing the deposits in the banks. Where does so much money appear in the country from? It's mostly formed because of the high economic growth within recent years. The growth in real incomes, high economic growth, as a result, savings emerge. Some of the savings, as a result, are steered to the financial market, the rest to the Vahes mentioned real estate market. People are implementing certain investments. They acquire assets that are because of the delta between what they earned and consume. Thank you. I was a little late. Maybe you've already covered that. Maybe there is a certain relation between the reduction of our interest rate with that of the Fed. If I provide a long answer, we have to look at what the Fed did and what happens as a result in the US T-bills market. To make it more exciting for you to have what to write about, I'll take the long story. What's transpiring in the US? Fed persistently for the fourth time in this year has reduced the rate. It's more interesting what happens to the 10-year T-bills. The yield curve over 10 years, we see that it's almost unchanged. 10-year yield is 4.2 of T-bills. What does this attest to? This means that we have an issue in the United States. The investors see the future interest at higher rates. Why? Because, in my opinion, the investors are slightly suspicious of American fiscal position and the issues surrounding it. How stable is America's fiscal position? What will happen to the sovereign debt? What will happen to the interest of American sovereign debt? As a result, there is an expectation among investors that they will have progressive growth of GDP, in which case debt to GDP ratio will reduce. There are groups that are cutting public expenditures, rebalancing the budget, but we see that by the end of the day, as a result of those steps, the investors don't conclude that there is positive progress, not to mention that there are big groups of investors who see negative developments. So 10-year T-bill yield curve, which is more or less attesting to the inflationary expectation. It's not about today, it's about tomorrow. It characterizes the risk, and if we see that the Fed reduces short-term interest but long-term interest remains unchanged, we understand there is a certain issue. What transpires in Armenia? In Armenia, we reduced the rate down to 6.75 with a certain time lag. Along with that, mandatory provisioning was adjusted. By a time lag, our yield curve, Vazgen will demonstrate, was adjusted. It got down. We have today, in the short term, the shortest paper is 6.75 to 7, fluctuating. The long-term 10-year bonds are below 9% already. So we and the Fed, naturally in the short term, in terms of interest, you may think that there is a correlation, but I believe that it's more important for you to look at the 10-year yield curves and compare them and think about whether there is a correlation or not. In today's meeting, this was discussed in this context, but I would say it was decisive in our decision making. Why? Because there were other factors as well which we focused our attention on. And secondly, we saw that it's not the short-term interest that is so essential in terms of differential, but what I mentioned, the long-term yield curve, which is more forward-looking. It's obvious in the American market in the reduced demand for short-term paper, and if those interests are going down there, if yes, maybe that will not affect our euro bonds because they have a different horizon. I wasn't speaking about euro bonds, I was speaking about Armenian dram 10-year treasury bills, which has not only the country's credit risk but also forex risk. We see that even as a result of those two combined, we have a reduced yield curve, whereupon the American yield curve is flat. So that de facto means reduced demand for our long-term paper, either reduced demand or a risk appetite level around that notch. This may have happened as a result of reduced interest towards American short-term T-bills, but at the same time, those or financial institutions that buy those bonds, they see that the market rate for the type of assets should be at exactly that level. By way of follow-up, may we assume that since the T-bill issues increase in volume, the banks no longer have that much, will not have that much demand because the deposits are also quite high, and it would not be interesting for the banks. It's a matter of fiscal, but the demand by banks towards liquid instruments is quite high. They attract deposits and invest. Some of investment goes to the bond market, the other goes to the credit market. So you're reflecting on the assets and liabilities parts of the balance. The deposits are the liabilities. Instead, they get some assets proportionally. The question is whether the banks will continue to invest in bonds. What is it funded? It's funded through the deposits and other financial means, attracted international programs. There are many components in their liabilities that allow them to buy liquid assets in form of bonds and less liquid in terms of loans. So I'm entering fiscal, but theoretically the banks will have less appetite towards attracting deposits and offering loans, because if they attract so much the risk-free growing amounts of bonds, they will have less interest in lending. There is the issue of risk-reward here. the yield from loans is much higher than from bonds. That offsets the let's assume they took a 10% deposit. They can't buy 9% bonds for 10% deposits. Short-term liquidity management is what is involved here. Each has a role here, which is why the balance of banks is diverse. It doesn't comprise just one financial asset or liability. Arcade Public TV. Cyber fraud has become a topical issue this year. What dangers do you see the central bank looming, and what additional technological or regulatory measures are planned to protect banks and payment system clients? Thank you, an important question. I keep reflecting on it, and as always, the first message I will send to the public is that they should be very alert, as alert in the virtual space as they are in physical. If they don't leave the door open when they go out, they should do the same with their virtual assets. This is important. Preventive measures, that is, allow us not only to protect the individual, but also to create an environment where innovation could take place, like you mentioned before. Innovation no longer happens in the analog domain. We have to move to the digital domain, and it comes with a lot of risks. And we have to jointly, reasonably manage the risks in the digital sphere. There will be some regulation, but you need to understand the first question about innovation and financial stability or resilience. Finding the sweet spot is exactly about this. Because if we, on the one hand, fully go to analog, for example, impose upon you to maintain your contacts with the banks exclusively in person with rubber stamps and physical signatures, that will be an extra encumbrance time-wise and expenses. As soon as we move to the virtual domain, if you fail to maintain digital hygiene, there will be a time where we'll have to take steps which will roll us back compared to the progress we're trying to attain today. Therefore, our policy decisions will be aiming at maintaining the proper balance and responding respectively. Since we're looking at it on a weekly basis, I do not see new cases or a trend of growth. We have dealt with the previous incidents. Thankfully, there are no new ones. Does this mean that there will not be any new cases? Absolutely not. This is a global serious issue in the financial and not only financial system. Digital fraud is ubiquitous. Digital ID theft, personal data breaches, these are the plague of 21st century, and we're not immune to that either. And we work in step with the rest of the world here. Public. The central bank recently mentioned that the dollarization level is historical minimum. That is a result of trust towards the dram. Is this not containing any dangers diversification-wise? Did we make that statement that dollarization is historically low? And no, I mean we made that statement about the trust level of trust towards dram increasing. A good statement. In these terms, I think that this is not a sporadic policy implementation result that brought to increased trust in the public. I would like to believe that this is a result of trust towards long-term policy. In many countries, we have seen non-linear behavior. The public, as a rule, initially is pretty suspicious. They keep thinking that the policies will be reversed or something unpleasant will happen, which will prevent them from believing or trusting policies. But in Israel, in Peru, in Russia, we see that trust towards national currency is increasing. I would like to believe that we experience the same phenomenon, that the central bank, through its reasonable, proper, weighted policy, acquired a certain level of trust by the public, which also conveys or impacts the decisions they take in terms of keeping their savings in national currency. This diversification pertains not to the public at large, but to individuals. It's ancillary to the liabilities of an individual. If I have a kid who studies abroad and I have to pay tuition in US dollars or some other liabilities that I have to, maybe it's more reasonable to balance my assets like that. But if my whole life and assets and liabilities pertain to, and the center of my economic interest is Armenia, then the assets should be reflected mostly in my bigger exposure, which I cover by keeping Armenian drams in the assets. The reasonable policy may be different individually. There is no universal solution for the entire public. But very recently, they've been stating that the Armenian population has become more mobile, travels more. Is it not strange that they keep less forex in savings, you mean? That's what I'm saying. If I travel a lot, and like in 26, I assume I will have 12 trips abroad once every month. And let's assume all of these are in European countries where euros are used. Maybe it would be more reasonable for me in December to keep euros, which I will keep and spend traveling every month. That's a personal phenomenon. But at the same time, you understand that keeping for 12 months savings in euro incurs more costs than in drams. The dram interest is higher. You will ask me what would happen to the exchange rate. I have no answer to that. But every person decides for himself or herself and manages their personal portfolio of assets. Mr. Galstyan, since after January 1, universal health insurance mandatory will be introduced. What's the function of the central bank here? The insurance companies are within your supervision, right? And this mandatory insurance, which will eat into the wages for those who earn up to 200,000, there are certain thresholds. What are your predictions on economic activity, inflation, and other services? It will be difficult to make any estimates about inflation. I don't think there will be a significant impact, at least in the first stage. When the system gets into full swing, we'll see how it works. Economic growth, I have no comment at all about its impact. As for whether we supervise insurance companies, yes, we do. But insurance companies, their role in this reform is not significant. This is a governmental reform whereupon the insurance companies have a small role to play. If I understand properly their positioning is voluntary ancillary services, offering and selling voluntary ancillary services rather than doing the mandatory health insurance. Do you have a function there? We have taken part in the discussions, but we have no function there. Ours deals with the supervision of private insurance companies, where we do not see an issue of Sputnik. The same question pertaining to expansion of cashbacks. I asked that during our previous meeting. Did you come up with some analytical assumptions as to how this may affect inflation? considering that many would take advantage of 2% cashbacks, that is pensioners, since it won't be combined by productivity increase. It will a good question. I think I trust our specialists, and their estimates is it will not have a major impact on inflation, because no mic, no translation. Impact on inflation. It went through 3.7 to 3.1, so the impact was positive. Thankfully, Hermine Can, everything is properly regulated here. The central bank has a inflation target. It doesn't estimate inflation. It's another independent body, and central bank takes notice of it in its activity. As for Aram's question, I think that the impact on inflation will be negligible. What determines that? Because obviously big amounts will enter the economy. You need to understand there is a certain restriction there to begin with, and secondly, since those amounts are spent this way or other, the person is not going to buy 10 items that he doesn't need just to get the cash back. He was doing it through cash, he will do it non-cash now. The excess demand proportion by the population, which you compared with productivity, you said there will be an increase in demand, which will not be comparable to the increase in productivity. As a result, we'll have inflation. I'm telling you, the increase in demand will not be that big. It will be just moving from cash to non-cash. So if a person disposes of several thousand dirhams more, a pensioner, if he takes advantage of that, he will have a certain increase in income, which in our estimate will not be to the extent to affect essentially the total level of prices. Whether there may be an inflation as a result of spending the cash back received, I would think it will result in inflation, but not in a concerning amount. Mr. Galstyan, there are companies out there who want to work with Armenian citizens here, concluding service agreements for remote work, whether they can or not. The employment contracts are in foreign currency. And how is this regulated? Remote work from abroad. There are many individuals who, especially in IT, who work for foreign companies remotely. The question is, if I got it correctly, there is a foreign company who wants to retain Armenian residents, conclude employment contracts, and pay in Forex. Is it possible or not? That's for starters, and sometimes there are organizations that want to issue loans to SMEs or natural persons. When do they face licensing requirements? Not to say that they needed universal credit organization licenses. The second is easier. The first I will have to look up, or the colleagues will tell me. As for if they do it regularly and it turns into a business, I give you a loan once, then twice, then 10 more times. That's a business already. You have to do a public offer, we have to fall under our supervision. They should get a special license and then go ahead with their business. As for the first question, so you loaned cash to your brother once, there is no problem there, I believe. I meant the organizations that want to transfer funds to foundations or SMEs. Will this lead to a requirement for a license or not? You mean transfer for interest? If that's a loan, not a transfer, which assumes certain financial payment in terms of interest, and the assumption is this is a for-profit endeavor, you're describing a type of economic activity which assumes licensing. Aycan, since the first question is multi-layered, let me not answer it upfront. Send it to me in writing. We'll give you it's resident, non-resident, it's resident to resident, it's various options, depends on who the employer is. I think it's no news, this question, neither for public nor for the central bank, because there are people around me who work for foreign companies. I don't know what their contracts are. On the one hand, the law says that all services and goods in Armenia have to be expressed in drams, but I don't know whether there are exceptions or not. On my radar screen, this issue has not yet appeared. We'll look it up and tell you. Mr. Galstyan, they reminded me about one of the fraud victims. Of course, I have contacted the law enforcement. False banknotes in circulation. This is mostly up to the law enforcement function. But since central bank issues those banknotes, are you aware about the volumes of forgeries? Where are they printed? And what's the circulation? And does a central bank have a function apart from the law enforcement? It's an act resulting in penal liability. It's exclusively mentioned in the turf of law enforcement. But the most of the cash that circulates in the country, after all, gets to the central bank. We collect, sort, remove the old ones. I won't say often, but there are sometimes cases when we remove forgeries, and we apply to the law enforcement about having found. We help them with the expert assessment, we do certain things, but function-wise, we have not much to do here. Where is the forgery equipment? The best cash printing machines are with the producers, reputable ones, but I don't think they are forging it with. They're not investing 10 millions in order to make forgeries. The counterfeiters do primitive things. They take a 5,000 bill, which was paper rather than plastic, cut it in half, add sides to each other. So they used both sides, split it in two, and used it in ATMs or retails. Primitive things. It's not that they are procuring printers from the reputable suppliers and then they come into a seller. So one side is the right, the other is. They split it in half and glue together and use one for two. Those counterfeits that get to the central bank, were they of such a quality that the commercial banks have not noticed them before handing them over? We've had such singular incidents. We could count them on the fingers of one hand. Mr. Galstyan, what would be your assessment of the current state of the banking sector in terms of return, stability and quality of assets? And do you plan next year consolidation deals? And is there a need for it that you see to increase the banking sector efficiency? Nuanced. efficiency versus competition. There are countries where they have just two banks or three banks that dominate the sector, and specialists and non-specialists claim that they offer economies of scale services that are better for or of higher quality for consumers. But there are serious issues there as well, because when you have two players, the two players often start dictating prices in the market, which distorts, as a rule, the competitive environment. As for my take on the overall situation in the banking sector, I think 25 was pretty good year for the banking system. Two issues that we continually try to communicate to our partners is MLATF investments. They need to consistently increase investment into MLATF. They need to grow muscle to be able to preclude such transactions. And the other is operational risks. These two phenomena that several years ago may have not been very important for us, where there should be a reasonable sweet spot between size and efficiency. Within the recent 18 months has been any discussion of having neobanks. We do not have those licenses. We just have one license, which is universal, and you have to pay a lot for just a neobank. We're discussing options to have licenses follow Lego structure, in which case I believe it would be possible to have new players in the financial sector. So for investment banks there could be abridged licensing requirements. Where could we expect such regulation? I would like to say yesterday, but it would be hard to say that. We work along those lines. Would be hard to pin down a date, but conceptual drafts are there to be discussed. Is the schedule of these discussions hinged on cyber risks discussion? First you solidify cyber risks. It's not only cyber risks. If we allow new players into the banking system, these investment companies that you refer to will receive opportunities to offer additional services. We have to be certain that investment services have the same level and quality of MLATF as the banks already in operation. That's a long-term thing. Same risks, same regulation. About communications, I apologize if you already said that in Q4 the high economic activity is maintained thanks to construction and services, as well as some short-term non-structural factors. Did you imply tourism here, or for example gold transactions, which is visible in activity but not in growth, which is why we use the word activity here. It never had an impact on the economy. Tourism is a full-fledged service, which is increasingly playing a more important role. I meant gold. Gold is regularly out there, then it's not there. It affects activity, but not great impact on VAT or economic growth. The fiscal policy reduced internal demand risks. Why this assumption if next year there will be an increase of both current and capex, but the budget deficit is planned to go from 5.5 to 4.5? So we see that the colleagues in the government exert efforts to have fiscal consolidation happening. We welcome that wholeheartedly, because I repeat, and I have mentioned it many times before, one of the biggest showcases of Armenia is macroeconomic stability. You can't have macroeconomic stability only through fiscal or only through monetary policy. And you also mentioned here that the wage increase has stabilized more or less. That is, tourism and other services are not pulling wages upwards. Yes. We see normalization of growth rates of wages, which assumes we have a certain level of stability. Halfway through the year, there was some activity in tourism flows from Far East, but it's not so big to pull the wages. It's not according to us, it's according to official statistics that we interpret. You also mentioned that the market expects in midterm to go down to 6 and 2500%. So although you reduced it now, the market expectations is slightly above market expectations. The magic word is midterm there. Okay, I'll use this opportunity and say a few more things. This time the decision is a split one. We had board members who were for keeping it flat. There were some board members who were for reducing it. And today it came to prove once again that the framework of policy implementation that we have adopted serves us well in this global uncertainty. We did in-depth substantive discussion, and it's this framework that allows us to communicate with you or the public at large and convey to you the whole depth of discussions that we had behind closed doors. The synopsis of our discussions is made publicly available. Tonight we will publish the minutes of the meeting and the votes. That's an exceptional thing that merits being evaluated. Almost all central banks behave differently. We do it in the most transparent monetary policy way. And in light of all these, the attraction and the charm of this framework becomes visible. It allows us to discuss various positions and arrive at a decision, at the same time without being condemned to display the whole sophistication of the decision, but to demonstrate all of the scenarios that we reflected on, the possible risks that we spoke about. And I believe we did it in a collegiate and open relations, which is what we're trying to build, at least with you and through you as a medium with the public at large. Your role is important, for which I want to thank you here. As for market participants, we have made surveys and various players have different expectations. Like we say, the risks A-type, B-type, equilibrium impacts. By the same token, market participants have their own mindsets that lead them to their conclusions. So as a market reference, we take this as an axis. Within the recent period, we were more concerned about A-type risks, which is why we kept the interest higher. Whereas now we have we're more at ease with A-type risks. There is a certain balancing of B-type risks, which is why the majority decided time was right to do something. The whole case comes to prove that. May we assume that the majority of market players are more optimistic than the central bank because for the future, in the midterm, they expect trajectory going down. I don't know what optimism means if we reduce the interest. That is, market developments will result in easing economic growth. Is that optimism? They may be expecting cheaper loans, maybe. That could be another hypothesis. Thank you.